Welcome to The Explainer. Today we're digging into the story behind Nvidia's incredible rise, a strategy so brilliant you could almost call it diabolical.
Think about it. From ChatGPT to self-driving cars, basically if it's got advanced AI in it, you can bet it's running on Nvidia hardware. They become the indispensable king of oil for this whole AI boom. You know, the one company selling all the picks and shovels in this new gold rush?
So how did they build this kingdom? And maybe more importantly, what did it cost? I mean, it's a story of brilliant strategy for sure. But as we're about to find out, there's also a darker, more aggressive side to how they built and how they maintained their dominance. So let's get into it.
All right, first up, let's dive into the heart of their genius, and this is where we get to a really surprising truth. Nvidia's real power, it isn't just about the chips.
Yeah, their GPUs are top of the line, no question. But their true, unbreachable competitive advantage, their deep moat, was built really carefully, layer by layer, with software. And that's what their rivals completely missed.
Okay, so what they did was build this entire software ecosystem right on top of their hardware. Now, the absolutely crucial layer here is this thing called CUDA. Think of it like a universal translator. It lets a developer, who maybe only knows a simple language like Python, unlock the full power of a super complex GPU without needing to be some kind of hardware genius.
And this just brilliantly shows the difference in their whole approach. See, Nvidia got it. They understood that adoption is driven by software. So they invested in developers, they created this huge community that then went on to build tools for their platform. Meanwhile, AMD, they treated software as an afterthought. It's like they built a supercar with no roads to drive it on. And the result? They got left in the dust.
So you can see what happened, right? With this incredibly powerful software moat, Nvidia effectively became a monopoly. And, well, that kind of power, it comes with a certain way of doing business.
This quote from an industry insider, it really says it all. You don't get to negotiate with a monopoly. It's just like how you can't haggle with Facebook over your ad prices, right? You can't haggle with Nvidia over GPU prices. They set the terms, you either pay up or you get left behind. Simple as that.
But here's the thing. The problem is even bigger than just the crazy high prices. The demand is so insane that the world's biggest tech companies are in a constant battle with each other. And they're not just fighting over the cost. They're fighting for the simple privilege of jumping the line to get their hands on a shipment of these chips.
And this leads us right into their even more aggressive strategy, one that plays out across the entire global supply chain. So a few years back, a perfect storm hits the chip industry. First, COVID blocks access to key minerals. Then, geopolitical tensions put the world's top chip foundry in Taiwan at risk. And then, the AI boom creates this unprecedented explosion in demand. All of this created a massive shortage. A shortage that Nvidia used to its full advantage.
Okay, here's a great little story that explains their strategy perfectly. When the French rock star Johnny Hallyday passed away, Amazon immediately went and bought the record label's entire stock of his albums. Why? Because they knew demand was going to surge the next day. They completely preempted the market.
And that is exactly what Nvidia did. They went directly to the chip foundries, the factories that actually build the silicon, and they preemptively booked their entire production capacity for the next 24 months. So by the time a competitor like AMD showed up to place an order, the shelves were already bare. Nvidia had already bought up all the records.
All right, so we've seen their aggressive business tactics, but that's matched by some incredibly clever marketing.
So for years, Nvidia kept claiming their chips were getting twice as powerful with each new generation. But you have to wonder, with engineers hitting the absolute physical limits of how small you can make a chip, how on earth was that even possible?
Well, to understand the trick, you first need to know about something called the TFOP. Think of it as the industry standard for performance, kind of like horsepower for a car. And for years, it was always measured using a 32-bit level of precision, which is known as FP32. That was the standard.
Okay, now here's where Nvidia got really clever. They realized that for a lot of AI tasks, you can actually trade a little bit of precision for a lot more speed. So they came up with a new way to calculate a TFLOP. Instead of one high-precision 32-bit operation, they did two lower-precision 16-bit operations. They totally changed the math, but they kept the name. And just like that, they effectively doubled their performance numbers on paper overnight.
And this chart, it just brilliantly shows you the result. The market saw this massive 2x leap in power. That allowed Nvidia to keep that steep curve of improvement going and, this is the important part, justify charging way higher prices. But in reality, the true like-for-like performance gain, it was much, much smaller, more incremental.
So all of these heavy-handed tactics, the pricing, the supply chain squeeze, the clever marketing, they've created enormous pressure in the market. And now, the rest of the tech world is finally fighting back.
And this rebellion is happening on three main fronts. First, you've got competitors like AMD who finally have a genuinely competitive chip. Second, big customers like Amazon Web Services are just tired of paying Nvidia's prices, so they're building their own custom chips. And third, the open source community, they're building a way out for everyone.
Now, that third front is being led by a company called Hugging Face. And get this, they're now valued at an incredible $4.5 billion. And if you look at who's investing in them, it's basically a who's who of NVIDIA's biggest rivals. AMD, Qualcomm, Google, you name it. They're all pouring money into this thing.
But that money comes with a very specific condition. The investors are demanding that Hugging Face, whose software is a huge industry standard, adapt its libraries to run perfectly on their chips, not just on NVIDIA's. What they're doing is they are funding the construction of an escape route from NVIDIA's walled garden.
And look, this isn't some distant pipe dream. The pressure is building so fast that industry experts believe we could see a massive, seismic shift in the AI chip market in as little as 18 to 24 months. The whole landscape could look completely different, and very, very soon.
Which, of course, leaves us with the big final question. The alliance is formed, the money is flowing, and a timeline is set. So, after a decade of dominance built on this truly diabolical strategy, is the AI king finally about to be dethroned?